Yeah, hello guys. I'm excited to moderate this last panel of this Asia Stablecoin Conference. And yeah, my name is Moyed. I'm from Delta Network. And yeah, please, you guys can introduce yourself and projects.
Hey guys, my name is Teddy. I'm one of the co-founders of Plume. Before starting Plume with our team, I worked in traditional finance, doing investment banking, and then I worked in a few exchanges. I was at Coinbase on their ventures team, spent some time at Protocol, and then worked for Binance on BNB chain. So excited to be here.
Hey, I'm Donald from Kiln. So I'm part of the BD team at Kiln. So we are one of the leading staking and yield platform in crypto. And basically we have around like 14 billion assets under stakes. And yeah, happy to be here.
So thank you for having me. Hi everyone, I'm Taiki, blockchain leader at Sumitomo Corporation. Sumitomo Corporation is a global trading and investment company headquartered in Tokyo with 127 offices in 63 countries. We have diversified business companies, so we have media, real estate, retail like supermarket chain, drugstore chains, renewable energy like solar power plant, wind power plant, and so on and so forth. And now we are stepping into crypto and blockchain space, started from validator node operation for Ethereum and Avalanche. We are planning to expand this validator business more and more. And also we are trying to build real world use cases. So currently I'm working for a stablecoin cross-border remittance project. So I'm really looking forward to discuss more about this today.
Yeah, great to hear you guys. So like as a general question, in Asia, like we do have a demand for stablecoins, but it's very limited to just retail and trading. So I'm just like curious what you guys think is the missing piece for the institutional use cases. So for example, like regulation, infrastructure, product design. So yeah, I'll ask Teddy you first.
Yeah, I think from our side, what we've seen work is actually having an entire ecosystem built for these institutional folks. So recently we just announced our Apollo partnership. They deployed their private credit fund, and Grove is seeding $50 million on chain. We announced some other announcements with Ant Group's wallet team. And so I think for them, it's really having an ecosystem where there is liquidity, distribution, and composability. And we've been building towards this goal from the very beginning days. And today we are actually the largest chain by RWA wallet holders. The whole space only has 390K wallet holders. We have 200,000 of them on Plume, and that's because the main thing that we're doing at the crux is making RWAs feel more like crypto, so that people can create these different use cases that you would normally do within DeFi. And I think that is a huge problem that we were tackling in the RWA space before, where I think a lot of folks in the TradFi space, they think if they tokenize something, then there will be buyers. But that's never really been the case. And so what we really sought out to do was build these partnerships with different exchanges, different custodians, different communities, and really foster the right education around these products. And now we're seeing money start to pour in. Our mainnet's been live for 3 months. We have a little bit over $400 million of TVL, and 75% of that is actually from retail. So it's basically, from our standpoint, it really depends on how you structure these products and create these different portfolios that makes it very easy for the end user to invest. And on the institutional side, I think what we've done well is we have a pretty big presence. We're headquartered in New York. Our general counsel came from the SEC, so we've been speaking with the SEC Crypto Task Force, the Treasury, and just really helping them kind of form thoughts around how to think about tokenization in the space in general. And I think all of these learnings have really opened the path for us to work with these folks. And I think one last piece of what we do, I think particularly well, is actually have a compliance stack in place. So we have AML at the sequencer level, KYC at the protocol level, freeze and seize capabilities through Nest, blacklisting, whitelisting. And so institutions can come on and feel like they can get access to the rest of the crypto ecosystem liquidity, but also feel safe, which is their number one priority.
I think for us, like on the demand side, like Asia's retail and sort of trading operations is basically like used by, like USDT is a very strong asset, right? But for institutions, there needs to be clarity on like regulations. In Hong Kong, for example, since like August the 1st, I think the regulators like sort of mandated that all stablecoin issuers to have a HKMA license, which is a really, really good step, in my opinion, for institutions to come in. And importantly, like the bottleneck is not on the infrastructure side, right? Because the building blocks are already there. Like we saw, with BVNK, they already like tapping, for example, D-Local's infrastructure for like APAC payout networks. So yeah, I think like for us, it's clearer regulation. Yeah.
Yeah, I have similar perspective with now about regulation. So in terms of regulation, since I strongly believe that huge potential of stablecoins use case for cross-border transaction, I think global alignment and more friendly for enterprise regulation is very, very important. And it's still on the way. So for example, in Japan, there is a regulation limits about volume of transaction, 100 million yen. It is like $6,000 or $7,000 per transaction. It is maybe okay for individual, but it is too small for enterprise. So that kind of regulation has to be modified in coming years and aligned to global. So, and one more thing is like I think there are several challenges about infrastructure as well. So in terms of infrastructure, especially in kind of off-chain part and also bridging part between on-chain and off-chain, there is several challenges. So for example, a similar example about stablecoin transfer. So thinking about enterprise use case, we always has to change from fiat to stablecoin and stablecoin to fiat because most of our payment is based on fiat. So this means we have to pay another margin to agent like cryptocurrency exchange, and processing time is constrained by the service policy of the agent as well. And also further, last 1 mile transfer from the agent to our bank account, we have to use a traditional financial system like bank transfer. So that means we have to pay another cost, and also the processing time is constrained by the traditional financial system. So yeah, we definitely need more user-friendly infrastructure as well.
Yeah, it was really insightful answers. Yeah. Now I want to go to like individual follow-up questions. So maybe let's start with Teddy. So like Plume is positioning itself as really like RWA focused chain. And I'm just curious, like what unique infrastructure is needed for RWA to directly support the stablecoin adoption at a really big scale?
Yeah, I kind of touched upon it earlier, but I think, what we're really focused on is 3 things. 1 is infrastructure, 2 is distribution, and 3 is, this DeFi layer. So on the infrastructure side, we've built all types of products to bring anything on chain, whether it's esoteric data sets or physical assets. But the biggest question we usually get is, when the assets are on your network, how do you actually find real demand and real users? So we kind of plug into these different distribution partners to find buyers for them. Whether it's like custodians, exchanges, like we're working with OKEx on our earn campaign where they're plugging into our, RWA assets and we pass yield back. And I think, being able to have institutions feel safe on the network and actually do, so like for Apollo, for example, they're actually going to tokenize their private credit fund, use as collateral on Morpho and then borrow more stables against it to do these different looping strategies. So I think from our perspective, having the foundation there and having a chain that's very vertically focused on RWAs is like the only way to really make the ecosystem grow entirely.
Yeah, great answer. Yeah, next is for Donald from the Kiln. So the Kiln is already powering staking infra for institutions, and I'm just curious like how staking and other services could blend with tokenized RWAs or stablecoins in general.
Yeah, so Kiln, we have a product called Kiln DeFi as well, which is we basically integrate like lending pools on the back end. For easy access to like non-custodial platforms, like retail users to earn yield on the stablecoin. And what I feel that like what RWA could do is essentially just providing more yield sources and more assets that retail can have access to in a like non-custodial manner. So yeah.
Yeah. Okay, next is for Taiki. So like Sumitomo is really big company in Japan and like one of major like conglomerates. And I'm like curious about your perspective on like how traditional institutions like banks or trading houses in Japan are approaching stablecoins and RWA pilots right now.
So yeah, 2 years ago, stablecoin regulation was enforced in Japan. So last 2 years, many enterprises are thinking about how we can approach to stablecoin for business development. And each company takes each approach, of course. So some Japanese major banks and local banks already announced issuing stablecoins and tokenized deposit as well. And also some other companies who has already kind of RWA related business, they are thinking to use stablecoin for a payment method for RWA. And since Sumitomo Corporation is a trading house with many branch offices, clients, and group companies outside Japan, we have huge volume of cross-border remittance transaction. So we are currently thinking to use stablecoin for the cross-border remittance.
Great.
Yeah, and as a just like closing remark, like for all of you guys, I'm just curious about like looking like 2 to 3 years ahead. Like what does the institutional use cases in Asia will move from like pilot to really like mainstream use cases? And how your projects are preparing to capture the shift?
Yeah, I think, so, there's a partner of ours in New York, a pretty large institution there. They spent over a year researching how to put assets on Ethereum. So I think it's still pretty early. They're bringing on their money market fund. And I think now we're kind of seeing a shift to private credit funds coming on chain. And I think, from all the conversations we've had with these different types of folks, ETFs could be pretty interesting as like the next asset to bring on. But I think overall, it all starts with the stablecoin. Like you said, you need to have that liquidity layer to purchase these assets and, actually have the right regulatory policies around everything. So I think the space is definitely forming. It's shaping up in a great way. And I do think that a lot of activity is happening in Asia, like everyone's saying. Hong Kong is a very big market for us. So yeah, I think it really depends on how the next 6 to 12 months go, but it's definitely trending the right way.
I feel like for us, it's probably like cross-border payments. It's a big use case, right? It just makes everything like cheaper, faster, and trade easier.
So yeah, as I mentioned before, I see several challenges, especially infrastructure and regulation. So in terms of infrastructure, we definitely need other infrastructure related to off-chain part and bridging on-chain and off-chain. I think, I definitely want to work with the protocols and the companies who are working for that kind of issues. And also, in terms of regulation, we need more enterprise-friendly, global-aligned regulation. Just one company cannot make it happen, so we have to work together.
Yeah, thank you for the insight, guys, and I think we can wrap up this session here. Thank you.